Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Markets gained for the 7th straight session. All sectors barring auto and IT trade in the green. L&T will buy out BG Siddhartha's stake in Mindtree and acquire additional shares to take control. Mindtree's promoters remain opposed to the deal. Anil Ambani manages to fend off jail time by paying a 550 crore to Ericsson thanks to his elder brother and sister-in-law for giving him the money. Ola raises $300 million from Hyundai and its subsidiary Kia Motors. The trio will develop electric vehicles and charging infrastructure in India. All right, first quick check on how the markets have been faring today. Yatin is here with a closer look at some of those stock movers. Yatin.
Good afternoon, Harsha. And if you look at the markets again, something like yesterday's trading session, nothing really has been done, in terms of up move. We are almost flat at this point in time. Only 10 points up on the Nifty at this point in time, almost trading near the day's low. So it has been a choppy session rather in trade today. However, advance decline ratio remains on the similar lines as we had, on an average for the week. So we have, 3 advances for every 2 declining stocks on the Nifty at this point in time. As far as the gains are concerned, PSU stocks are ahead in trade today. So we have ONGC, NTPC gaining by 2.5% each. So is the case with Infratel and Bharti Airtel. Both of these stocks are again top gainers on the Nifty at this point in time. What's not doing well is the auto pack. Yesterday also news reports were suggesting, and today also reports are suggesting that all auto companies, 4-wheelers or 2-wheelers, have been taking production cuts. There has been no official comment on the story by any of the OEMs. However, Eicher Motors as well as Hero MotoCorp, the top losers in trade today, 2.5% cuts coming in for each of them. Also, we have L&T, JSW Steel and TCS being the top losers on the Nifty at this point in time. However, what's active in trade? SBI, Jubilant FoodWorks, PNB, Reliance Power, Bank of Baroda. So the PSU banking lot as well as few of these consumption names are doing quite well in trade. Mindtree remains in focus after yesterday L&T announced an offer or an intention to buy shares from the open market, as well as to do an open offer. Mindtree, however, after opening firm, has been down almost 1.5% in trade.
Yes, and thanks for that. But hold the thought, we're going to be talking about what Goldman thinks of India. Goldman Sachs is upbeat on India's prospects over the next 12 months, pegging the Nifty target at 12,500 for the period. What's turned Goldman positive?
Well, it's earnings, Harsha, and if you look at Goldman, they have not only upped the target price of the Nifty, but they have upgraded India to overweight from market weight. More importantly, this is on the backdrop of the things that Goldman believes could work in India's favor. The number one being the earnings growth for Nifty, which are expected to be 16% for FY20. Not only that, the target price is 12,500 for the Nifty. On the stock side, they are constructive on banks as well as domestic cyclicals over exporters and defensive. Not only that, they do believe that there is value in certain consumption names as well as values in the mid cap which have been beaten down in trade. PSU banking is something that they believe could deliver substantial returns moving forward. So clearly, Goldman not only believes the earnings to catch up, but also expects the beaten down names to do well in trade moving forward.
Yathan, thank you so much for that. That's Goldman's view on India. India's largest engineering and construction company has mounted a hostile takeover of IT services firm Mindtree. L&T has already entered an agreement with BG Siddhartha to buy most of the stake held by the Coffee Day Group. The company plans to acquire additional shares from the market to take over majority stake. Mindtree's promoters, however, remain unconditionally opposed to the takeover and have strongly condemned the attempt. Sajid now joins us with the details. Sajid, this is not going to be easy with the promoters still sort of, holding out against it, isn't it?
That's right. For L&T, it's going to be a wait and watch as how the promoters and the board members of Mindtree are going to react to it. If you go to the transaction, L&T is going to acquire 20% of BG Siddhartha's stake and then additional 15% from the market, which they will start only after the CCI approval comes in, and then there's a 31% open offer which will potentially take their stake to 66%. Now, throughout the conference, the management of L&T said that they want to keep Mindtree as an independent entity because they are working on different segments or verticals verticals in the IT services space, and till the time they get to a critical size where they start eating into each other's space, they don't want to go in for a merger. That's something which the CFO Shankar Raman had clarified to our question. On the question of why L&T Infotech was not the reason, was not the vehicle for the acquisition, he said that it would be unfair to the shareholders of L&T Infotech because Mindtree has a lower growth rate and margins, and that would bring down the shareholders or minority shareholders of L&T Infotech. So there were credible reasons why it was why they have gone out for this acquisition, though Mindtree will become the third services arm, IT services arm within the L&T stack.
Sajid, thank you for that. In a press conference earlier today, L&T's Managing Director and CEO explained the rationale behind L&T's bid for Mindtree, an acquisition which they think will be an addition to the company's already profitable services portfolio. Listen in to what they had to say.
Over the last few years, we've been giving more fillip, management interest and push into a services business, which on a broader scale is LTI, which is a listed company, L&T Infotech as we used to call it, LTS, which is our technology services business. And if you add into the services portfolio, it is L&T Finance, which is again a listed company, and our reality business, if one would like to call it a service business. In our language, we call it a services business. These businesses are, from the inherent nature of these businesses, more profitable, and we are able to see PAT of 15 to 16% therein. And as we look forward, we see that that's the kind of profitability that is available in that business. It was, from our point of view, a business from our IT portfolio services point of view made enormous sense. Mindtree, with our investment there, will be run as an independent company with its board, with its management. And what L&T at best would do is to provide board oversight, management connects, value additions, benefits. That is our purpose and intent right now, and that's our purpose and intent as we look forward immediately. What we are trying to do is with, if I can use the word, pyar. And we will continue to look at it as something which we are doing from our dil. And we would like an intent to take it forward in the same manner and purpose.
Dil and pyar, says the management of L&T. A hostile takeover this is, and this is unheard in the Indian market. To understand the situation, what's the likely road ahead? Amit Tandon, Managing Director at Proxy Advisors from IIAS, joins us. Amit, thank you so much for joining us today. Firstly, before I get into the specifics of this, what have you made of the open offer per se? Is that beneficial to shareholders, arithmetically speaking?
Look, one can work out the arithmetic, but unfortunately the transaction isn't about arithmetic at this stage. It's a lot about, to use some of the words which the L&T management used, it's about dil and pyar, and it's all about the softer issues and the future of the business under a new kind of shareholding structure. Whether that will be able to deliver or whether as a consequence of the new shareholder coming in, some of the existing people are going to up and leave the company. That is the heart of it, and that is what shareholders need to take a call on, whether they would like to, they see business as usual and continue as it is, or they feel that the takeover is going to be extremely, extremely disruptive, and therefore the business really doesn't have the same future or will not be along the same trajectory as it has been in the past.
The promoters of Mindtree, Amit, are continuing to hold out against this and strongly objecting L&T's takeover bid. And in a statement, they've said that this does not offer them any strategic advantage, and strongly believe the transaction will be value destructive to shareholders. In an environment like this, if you were a shareholder of Mindtree, what would you be thinking?
Sure. Look, the management has made that, and our view on some of these things is that while corporate culture is important for us sitting outside, we really don't know what the internal dynamics are. We don't even know whether L&T has kind of reached out to some or all the promoters, some or all the senior management who's going to stay. And of course, culture is not merely, in the end, it's a kind of amalgam of, people, place, clients, technology, and everything, and what that heady mix is going to hold on. So it's very difficult, and therefore our view at this stage is it's for the board who are familiar with the people, who are familiar with the clients, who are familiar with the technologies, who are familiar with the interplay of these forces, to take a view whether this is going to be truly disruptive as the management is saying it is going to be, or is at this moment the management, and I can empathize with them, they may not be quite happy with the change or any change at this moment. They were quite happy, and they had been in their comfort zone, so to speak, within the existing shareholder structure. So they can decide what the consequences of this will be. If it is debilitating for the company's prospects, they can then advise the investors accordingly. If they feel that, look, the company is going to be in safe hands with this change, they can again advise the company accordingly. I just want to add that so they can advise the company accordingly and take it forward from here itself.
We've heard the L&T side of the story. We've heard Mindtree's objections. The voice that we've not heard is the independent directors of Mindtree. What should they be telling the board, you think?
Look, they need, as I said, they're in the best position to judge whether, whether the transaction will be disruptive or not. We have to remember that all the focus has been on the softer issues. Again, it comes out from the language of the L&T management. They'll PR. What they've also kind of emphasized time and again is the fact that they're going to leave it as a standalone company. They're not having any intention to merge it. So this message which they're sending repeatedly through all this is the fact that they're going to leave the company. They're not going to play around with the culture. They're not going to play around with the DNA of the company, so to speak, and kind of let it prosper and grow from where it is, because let's face it, they're putting in a lot of money on the table, even assuming they don't get the entire 67% which they want to reach, but even reach a level of about 40-45%. They're still going to be spending about 5,000-6,000 crores. So that's pretty serious money. So it's in their interest also to ensure that they don't do anything which debilitates the working of the firm, and the company continues to deliver as it has in the past, with some degree of tweaking around, and as they said, through their contacts, connectivity, and through some of the softer skills which they bring. But the board itself needs to take a hard look in terms of, is the new shareholding going to be is not going to be beneficial for the company, as some of the promoters are saying, or do they believe that, look, that's a bit of a stretch. They do believe that there may be some short-term disruption, but the company can very slowly get its mojo back and continue to kind of along its path of growth and acquiring new clients going forward.
We'll leave it there, Amit. Thank you so much indeed.
It's the board which has to, play the role. So the board needs to decide whether, the 980 rupee price is right, or whether they feel that the worth of the company is significantly more. They have to figure out whether, the change of share ownership is going to be truly disruptive or not. And based on what their conclusions are, they need to guide the shareholders. It's one of those cases which is not coming to shareholders to vote. So it's therefore very difficult for us to kind of say something at this stage. And again, since a lot of it is to deal with what's happening inside the company rather than outside, again, it's very difficult for us to take a call. The board is in the best position, and the board should stand up and be counted at this stage. And by that, I mean the independent directors rather than those who have affiliations on the board.
Point taken. Amit, thank you so much indeed for joining us with your perspectives. Amit Tandon from IIAS talking about what this means for both Mindtree and the role of the board as well in deciding on this offer. Anil Ambani, meanwhile, has managed to fend off jail time by paying up Ericsson. The Reliance Communications chairman thanked his brother and sister-in-law for giving him the money to pay up. Arpan Chaturvedi now joins us with the details on this one. Arpan, this comes on a day when Reliance Jio and Arcom also called off the proposed deal for airwaves. Arpan.
That's right, Harsha. So we saw this dispute between Ericsson and Arcom go on for over a year, and we saw contempt petitions after contempt petitions being filed by Ericsson, who was claiming that that Arcom was liable to pay the dues until last month, when we saw the Supreme Court finally held Anil Ambani, Arcom guilty of contempt and gave them 4 weeks to make the payments. After that, we saw Arcom approach the NCLAT for release for funds. Out of the 550 crores, 118 crores were already submitted to the Supreme Court, and Arcom was seeking the release of funds from the trust and retention account to make these payments, which was opposed by the banks. And last Friday, the NCLAT had declined to pass orders for release of funds, which is after which, of course, we saw that that the Supreme Court deadline for 4 weeks was to end today. And yesterday we saw that statement from Arcom, where they said that they had paid the dues which were owed to Arcom, Ericsson, beg your pardon, as well as the other penalties that they were supposed to pay in pursuance of the Supreme Court's order, of course by intervention of Mukesh Ambani, thus bringing an end to this dispute with Ericsson that had gone on for over a year now.
Arpan, thank you so much for that. Let's move on. It's the country's largest car maker, commanding around 50% of market share. Maruti has had a good run over the years, but the recent slowdown has hit the company hard, and it's reflecting on the stock price. Yash Upadhyay is standing by to tell us what's hurting Maruti right now.
That's right, Harsha, because if you take a look at the year-to-date performance of Maruti, the stock is down close to 8% as compared to the Nifty Auto Index, which is down about 7% in the same period, despite of the fact that Maruti commands almost 23% of the weightage in the overall Nifty Auto Index. Now, the primary reason for this is the fact that the auto sales for the company have been slowing down consistently over the last 8 to 9 months. So what we've done is that we've taken a 20-month picture of how the auto sales have grown for the company, and while they remained in the high teens to upwards of 20% in terms of growth over the period of July to June 2018. From July 2018, there has been a significant drop in volumes. In August, they saw their volumes fall by as much as 3.4%, which was the highest in a very long time. And 6 out of the last 8 months, they have reported negative growth in volumes. The only 2 times where the number has been positive has been a marginal 0.2% increase on a year-on-year basis. Why has that happened? Well, it has been a confluence of reasons which has impacted the entire industry, but more specifically when it comes to Maruti, their new launches, they have not done very well, is what we are gathering from 2 of the Maruti dealers that we spoke to, as well as brokerage reports citing the sluggishness in demand. Their recently launched 2019 WagonR model, which commanded a waiting period of almost 2 to 3 months at the time of its launch, has now come down to almost 4 to 6 weeks. The other 2 names, the Baleno as well as the new Ignis, they too continue to struggle in terms of generating the kind of buzz that generally new launches tend to do. As a result of which, the heavy discounting which the dealers had announced at the end of the year as part of the year-end sales, they have continued well into the in 2019 as well, and now in the month of March as well, with benefits along with exchange offers and several other combined options going up to more than 60,000 rupees for some of the marquee cars of the company, which includes the likes of Baleno, Brezza, as well as the Desire, which up until a year back had waiting periods of more than 2 months. Also, what we've done is that we've taken a look at the SUV sales of the company. Now, this is the fastest growing segment overall in the auto industry, and in this, the sub-segment, which is the compact SUV space, that is where Maruti is the strongest player, because the Vitara Brezza has been the best seller since its launch back in February 2016. And there, what we are seeing is that there too, the sales have been slowing down considerably over the period of the last 8 months. As you could see, they fell by about 16% again in the month of August, and in February there was just about a 7.4% growth as compared to 20% plus kind of growth that it has seen since June 2017 up to July 2018. So considerable slowdown there as well, along with the fact that there have been new competitors which have come into the space, which means that there could be further competition going forward. The likes of Tata Nexon, which is priced quite attractively. In fact, is the most affordable of the three over here. The XUV 300, which launched recently, has already crossed 13,000 bookings since its launch last month, as well as the management indicating that they target a 15 to 20% market share in this space, which would mean further pressure when it comes to volumes for Maruti Suzuki.
And the stock continues to be costly, isn't it?
Absolutely, Harsha, because if you take a look at its valuations, its FY90 price to earnings multiple stands at about 27 times versus its 5-year average of 23. So that is a premium of almost 18% over its historical average. Moving on, if you take a look at the analyst recommendation, while from 6 months back, there are more number of analysts which are bullish on the counter. About 40 of the 50 plus analysts which track the counter. The return potential on the stock has come off considerably. The 12-month consensus target price now stands at about 7,500 rupees. It stood at 10,000 plus just about 6 months back, which means that the analysts have considerably moderated their return expectations on the back of the sluggish outlook for demand.
Yes, thank you for that. Ola, meanwhile, has found another investor. The ride-hailing platform has raised $300 million from Hyundai and its subsidiary Kia Motors. The deal value is about Ola at about $6 billion. Nishant is standing by to tell us what this latest round of fundraising would mean for the company and what they plan to do with it. Nishant.
Well, right, Harsha. So Ola is raising, as you said, about close to $300 million in this fresh round of funding from South Korea's automakers, Hyundai and Kia. They're also its largest bet across any market. Last year, Hyundai has invested about close to $250 million in Southeast Asia's ride-hailing giant Grab. Now, as part of this deal, this investment aims to create a strategic partnership between Ola, Hyundai and Kia, and as part of an understanding, they want to work on building electric vehicle and infrastructure in the country. A part of the focus will also be going into developing cars specific for the ride-hailing market, and that not just for Indian market, but that will be working for the global market. Now, this round, according to people privy to development value, Ola at about $6 billion and is also part of the ongoing $1 billion round which Ola is looking to raise. We just saw last month Ola getting the backing of Flipkart's co-founder Benny Bansal also investing money into the startup.
Nishant, thank you so much for that. Let's move on now. Some under-construction houses may cost more from next month as developers may not be able to claim input tax credit. Remember, the GST Council cut rates on under-construction properties in the last meeting. The Council is meeting again today to finalize the transition plan. Nikunj Jori reports on those proposals under consideration. Nikunj.
The GST Council in its meeting today is going to finalize the transition plan through which rates for real estate projects are going to be reduced. The GST Council in its last meeting had reduced GST on affordable housing projects to 1% and other housing projects to 5% without the benefit to claim input tax credit. The GST Council today is going to finalize whether input tax credit will be allowed to be claimed by builders or not. According to an official Bloomberg Quint spoke to, the taxes which are paid on inputs and invoices have been issued before March 31st, 2019, the builders will be allowed to claim input tax credit, whereas in cases where taxes have been paid on inputs but invoices have not been issued by March 31st, 2019, the builders will be denied input tax credit. According to experts, this is going to be a big setback for builders if input tax credit present in their books is not allowed to be claimed, and it is unlikely that the prices of residential projects or houses are going to come down because of this move of the GST Council.
Thanks for that. Out of time on the show. Thank you so much for joining us on lunch. Keep watching Bloomberg Quint.